this later on the recording. So let's run through it. So just to start off with then, Ashlee, what are the basic 3 or 4 things that the government's trying to do to help small business during this downturn?
Yeah, so they've got 4 key areas that they're looking to target. Delivering support for business investments by way of changes that have been made to the instant asset write-off rules. Cash flow assistance for businesses. They'll be providing payments towards PAYG withholding apprentice and trainee wages for eligible businesses. There's also some stimulus payments available to households where individuals are eligible for certain pensions and things like that. There's also an assistance for severely affected regions, but there's not a lot of information been released on what that is as yet.
Great. So I think that with what they're calling the cash flow assistance, there's a $25,000 maximum amount available for small businesses who are employing staff. So firstly, what size of business do you need to be to qualify?
So to qualify for that, you need aggregate turnover under $50 million, and that's based on prior year return. You must also have employees. If you're paying wages to employees but not required to withhold PAYG withholding, then you're still eligible for the minimum payment, but you do have to have employees.
Okay, perfect. And how is the payment going to be calculated in terms of the amount each business will get?
So eligible businesses will receive a credit of up to 50% of their PAYG withheld on the March and June BAS, up to a maximum of $25,000. If you're a monthly lodger, the credits will be applied to your March, April, May, and June lodgements. The March one, the credit will be calculated at 150% of PAYG withheld rather than 50%, just to make it equal to what the quarterly lodgers would get, because they would have reported PAYG for 3 months on that BAS, and monthly lodgers would only have reported for 1 month.
Perfect. So essentially it's 6 months of cash flow of assistance based on the wages you pay from January to June, because some of the businesses have already done a monthly BAS or monthly activity statement from January and February, then that will get caught up in March. But everyone's getting 6 months regardless of what cycle. So there's no point of changing from quarterly to monthly or the other way around, just to clarify that part of it. Okay, so there's an example there of a construction company you were going to just quickly run through in the fact sheet, and I'll send everyone a link to that fact sheet while you're going through it.
Yep. So the first example is Sarah's construction business, and she's a monthly reporter. So it goes through, she's got 8 construction workers on average. So she's got employees there earning $89,730 per year. She's on the monthly BAS. So you can see her BAS for March shows a PAYG withholding amount of $22,512. Oh, sorry, that's the payment she'll receive. So that's calculated 150% of what her PAYG withholding was for that month or quarter. And then when she lodges April, the payment will only be 50% of that month up to the $25,000 cap. And then in May and June, she's exceeded the cap, so there'll be no further payments. But you can see how it's accelerated so that you receive most of the money up front if you're a monthly lodger.
Yeah, perfect. So I think we're going to find that most people in the small business space aren't going to reach the full $25,000. There'll be a few that won't even get will only get the $2,000. But the important thing is that you're paying wages. So one of the things would be if you are structured as a company or a trust and you're paying yourselves wages, there's nothing in the fact sheets that say that you can't get this benefit for the wages you're paying to yourself. So it might be that you haven't been paying wages to yourself or declaring any wages, but this would be a good time to do that. So there'll also be some businesses who pay wages, but as Ashlee was saying, you don't need to take any tax out because the wages are so low. So you've got some casuals, they might be doing a few shifts a week and they don't earn enough to pay tax from you. You'll still get the $2,000 payment when you do your March quarter BAS as long as you're an employer. So Ashlee, how is the payment treated for tax purposes?
So it's a tax-free payment. So there'll be no implications for income tax.
Yep, perfect. And then I'm not sure if you had the Xero example up on the screen to run through for people, or can we skip that?
Let me grab that.
Yep. So we're just going to go through how you might process this on your accounts. So you've got a tax-free payment, so you don't want to include it in your tax return, you don't want to include it in your BAS. I'm just going to go through a quick example on Xero, basically, of how to process that payment. Just while you're getting that one ready,
It's making me go through the two-step authentication, so I'll just be a second.
Oh, yeah, that's fine. The other thing worth noting is what specifically would I need to do as an employer to get this benefit?
So there's nothing additional that you need to do to get the benefit. Just make sure that the BAS are lodged on time, and then it will be calculated and credited to your account at the time that you lodge the BAS. Perfect,
great. So there might be some situations, especially if you're doing monthly BAS, that you might actually get a refund for this BAS because you're going to get a refund of tax on wages, and that might be more than the GST you would have owed. So you're either going to get a smaller BAS than the figures you lodged, or you're going to get a refund of the amount. Most times it's going to be just a reduced amount payable rather than an actual refund.
Yeah, and they said that refunds should be processed for within 14 days if it does put your BAS into a refund.
Yeah, perfect. So we're going to do an example here. We're going to pretend that $4,500 payment on the left there, where it says Smart Agency, we're going to pretend that's the ATO.
There you go. So if this was your payment to the ATO, say your whole PAYG payable amount was $9,000, you'd post the whole $9,000 to PAYG withholding payable, and then the PAYG credit you would post being 50% of total PAYG withheld, be $4,500, and you would post that one to other revenue, also BAS excluded because there's no GST on the credit, obviously.
Basically, if you just put $4,500 to PAYG there, it wouldn't balance out, and it would look like on your balance sheet you haven't paid some of your tax. But by doing it this way, splitting it in half, then that refund that the ATO is giving you isn't going to come onto your tax return or your next BAS. So you're not going to pay GST on it. You're not going to lose any tax on it. And then that'd be the way to do it. If you're not sure, just let us know. We can log in and do that for you on your account. No problem there. So essentially, it's a benefit for employers. It's automatically done when you do your BAS, and there's not much more to it than that. So we'll move on to the delivering support for business investment, which is essentially a change to the asset write-off. So actually, they've changed the asset write-off in terms of how big of a business you can be, or how small you need to be to get it, and also the limit. So if you want to just go through what the current eligibility is in terms of the size of business, and the current eligibility in terms of the amount of the asset.
Yeah, so originally the instant asset write-off was available for businesses with an aggregate annual turnover of less than 50 million, and the instant asset write-off was available for individual assets costing less than $30,000. The stimulus has increased the aggregate turnover from 50 million to 500 million. So it's going to include a lot more companies now than it did before. Also, the individual asset write-off limit has increased to $150,000.
And how long also to do? Oh, sorry, go.
Oh, sorry. I was going to say they've also there's an accelerated depreciation option available for Division 40 capital assets, where you can write off 50% of the cost upfront, and then the remainder would depreciate at 2.5% still. So that's another change.
Yeah, that would be for assets even more than the 150, which is not going to be very common, I wouldn't think. So, yep. So how long have people got how long does the $150,000 limit apply?
So it's for assets purchased after from the announcement date, which was Friday, 13th of March, up until the 30th of June, 2020.
Yeah, perfect. Okay. So where I see this working for people is if you're going to, if you're looking to buy a car, say in the next 6 to 12 months, then that would normally be more than $30,000, but less than $150,000. So that would be you get more tax benefit by buying it before June than you otherwise would. But with all of these asset write-offs, you actually don't get any additional tax benefits. You just get the tax benefits sooner. But other than that, with a $30,000 limit, most people's equipment and machinery, computers, things like that would already fall under the 30 grand. So there's some benefit there if you're thinking of purchases between 30 and 150, but not a great deal different. Again, there's a fact sheet on the website. I'll send the link to that for people if they're interested. I'll put that through the meeting. Cool. All right, and then so separately to the stimulus package, there's also, you also would have heard about the $750 household stimulus package. It's not really for business. It's just people who are on different benefits and concession cards and things like that. So we might just skip that for today's session. The fact sheet's on there. So let's look at the superannuation guarantee amnesty. Let me just send that link first before I forget. Yeah, so superannuation guarantee amnesty. So there are a few penalties that normally apply for paying late super that aren't going to apply because of the amnesty. So what are those, and what might be the benefit for a business who's got some late super to catch up on?
So usually super paid late is not tax deductible. Under the amnesty, you will still be eligible to claim a tax deduction for super that you've paid late. In addition to that, you are not required to pay the administration component, which is $20 per employee per quarter. You'll also be exempt from Part 7 penalties, which is sort of the main one where the bulk of the expense would come from for late super. Perfect.
All right. So just with that tax deduction, let's say you pay $1,000 of super for a worker, you get 27.5% back because it's tax deductible. So that $1,000 really only costs you $725 if you pay it on time. If you pay it late, you lose the whole $1,000. There's no tax break. There's nothing you get back for that. So this is a one-off chance people have to make up for any shortfall in super, going back as far as you like, and to still get that tax break. So there's a significant chance to get things up to speed and without any of the penalties that normally apply. So it's actually a really good opportunity if you have missed a few payments. Just cash flow gets tight, and often super is the first thing people stop paying. This is a great chance to catch up. So what are the super's paid quarterly? So what are the quarters that you can catch up on?
Yep. So the amnesty applies all the way from 1st of July 1992 to 31st of March 2018. So it catches quite a number of periods.
Pretty much since compulsory super began in 1992, so any amounts you like. And what's the cut-off deadline for actually doing something about it?
Yeah, so you've got till the 7th of September 2020.
Fantastic. It's about 6 months. What's the mechanism for actually applying to get the amnesty applied for your business?
So I can't quite see where the link is on this page, but there's a super amnesty, SG amnesty form, it's called, and it looks like this. We'll find the link, direct link for this document, and can share it at the end.
Yep.
Yeah, so this is the form. It just asks for employer details.
Got to say what, who the workers were, how much for each worker, etc., etc. and then you pay that off to the ATO, and then they'll track down the worker and pay it into their super. It's probably the most common use I think I'm going to see for this among our clients would be people who've had tight cash flow and not paid their own super for a few quarters. There's nothing to say that in this information that your company can't rectify your own super entitlements. If that's the case and it's your own super you haven't paid, this is the perfect time to catch that up without having to pay any extra. So that's really good. Cool. Yeah, so if that form looks pretty imposing, we're happy to help people out with those forms if need be. I'll just find the link for that. Right, and how to apply. So yeah, just send the how to apply link to you guys now. But yeah, get in touch with us if you need any help with that. It's definitely worth thinking about doing. The last thing that I'll send is, let me just find the link. Just the ATO's got some general advice about dealing with this situation. Let's say when you lodge your BAS statement, there could be up to 3 components to your BAS. There's your company tax, there's the tax you pay on wages, and there's the GST you've collected. So with GST, the customers have paid the GST to you. You're supposed to pass it on to the government. There'll be no change to the GST part of your BAS. The tax you've taken out of employee wages, we talked about that earlier. Ashlee went through the between $2,000 and $25,000 rebate. So you get a rebate of half, 50% back on the tax that you've paid for employees. That's the second part. The third part is company tax. So if you're operating, or income tax, basically, if you're paying income tax on a quarterly basis, so what we call PAYG or pay-as-you-go tax installments, you can actually do a variation to the amount you're paying. So if you've been paying quarterly so far this year and you realise now your profit's going to be less, you can actually ask for a refund of those amounts back. You're also allowed to choose to vary your BAS for the March quarter and just pay $0 of income tax. So you still need to pay the GST and pay half the wages, but the third part, the income tax, you can choose to vary that to nil and then have less BAS to pay, less cash flow, and that could be a way of riding it out through this lower period. If you don't pay income tax this quarter, you choose to vary it to nothing, then that could mean you need to catch up at the end of the financial year, or it could mean that your profit's lower, and so it balances out anyway. But definitely a short-term fix that you've got as an option. You can also renegotiate payment plans with the ATO. So they've said on that link, if your business has been affected by the virus and you need help to pay your existing and ongoing tax liabilities, contact us to discuss entering a low interest payment plan. Equally, if you've had new tax debts and you've been charged interest in the last few months since the virus became a problem, they'll be looking to remitting penalties. So it says, where your business is affected by the virus, we will consider remitting interest and penalties applied to tax liabilities incurred after the 23rd of January 2020. So if in the next few months, if you happen to lodge late or more importantly, if you pay late, you can apply to have that back. So rather than paying tax and interest, they'll reduce it down to just the tax. So bear that in mind if you do get stuck. The important thing over this time, if you do have a shortage of cash flow, or if your business is affected by this and you're not making as much as you were, even if you can't pay a BAS or a tax return, you should definitely still lodge the document. So the ATO are concerned about lodging and paying. So you should at least get the lodgements done on time. Make sure you get these benefits. Even if you can't pay it, even if you need a payment plan over a longer period, you're always better off to lodge, even if you can't pay. Don't wait till you can pay before you lodge. That's a general advice that applies to all situations, but specifically for this with the virus. The other thing is that there's no superannuation guarantee changes. So in terms of, we talked about late super from past quarters, But talking about the quarter from the 1st of January to the 31st of March, you need to pay all your super for all the staff by the 28th of April 2020 on the ATO's guidance that I just sent you a link for. It says that by law, the ATO can't vary the contribution due date or waive the super guarantee charge where super guarantee payments are late or unpaid. So they actually have no flexibility, and there's nothing in the stimulus package or in the flexibility of the law that says that you can pay your super late. So to summarise all those points, so 1, you can reduce your tax. 2, make sure you lodge if you can't pay your tax. And 3, in terms of payments, if you've got GST, income tax and super is the one you should prioritise paying first, because that's the one where there's the biggest chance of a penalty for being late. So pay your super this quarter, even if you can't pay your BAS. Lodge your BAS, even if you can't pay your BAS. That'll be the main messages for this current period of time. And in terms of the late super, one more thing I want to say about that is that the ATO brought in single touch payroll over the last 18 months. It's now fully operational. That means that they get, rather than waiting till the end of the year to know what each employee made, they know on payday what each employee made. And so then each quarter, they can compare their super records to their employee wages records, and they'll know who has paid wages to a worker and not paid their super. It'll be pretty easy for them to find that out. I was talking to my business partner, Craig, about this just this week, and he was saying that the fact they've got this amnesty coinciding with single touch payroll suggests that they're giving everybody one last chance to catch up. And then if you don't take advantage of the amnesty and catch up by September this year, then they've got the data and the ability basically to go after anybody who's not been paying their super on time. And that would include people who are paying themselves a wage and not paying their own super. So I think the days of super being a way of, paying your super late being a way of, well, I'm struggling for cash flow, let's just defer that to another time. I think those days are over. It's going to be much easier for the ATO to stop people doing that. So that was all really about the stimulus package. I've got the recording of this to send out at the end of the session as well. But before we do that, is there anything else you want to add, Ashlee, that we didn't cover?
We've covered all my notes. It's pretty comprehensive. Right. Unless anyone's got questions. No,
great. All right. So if there's any questions people might want to do, up the top there's a chat box. You can type questions into the chat box if you've got anything that you wanted to add or ask specifically about the changes. Or if not, you can obviously call us afterwards if it's something that's more confidential and specific.